Wouldn't bear market end? Oh, like mid 2023 to early 2024, maybe? At best. I was expecting some up price into close of the put sell-off. Do you mind explaining what you think is going on with price action on the SPY right now? We may still get some upside into close, but not a lot. Most of those puts are going to be exercised. They're in the money. They're not like out of the money and closing out, right? Most of the out of the money puts are gone already. They're in the money. And SPX is cash settled. So they just exercise them. You just exercise them and get the cash. Yeah, I trade options on minis. Are they any good? I mean, it's a wild ride. But yeah, you can make good money on them. Well, I think what happens is into the end of this year, beginning of next year, we start to see forward guidance pulled back, right? And we'll start to see equity sell-offs. And that's going to lead to like the low point for the market, right? Once we start getting large scale equity sell-offs from big banks and stuff, then I think the Fed's going to start to roll down the on RRP rate. So banks have to go out to the market with their liquidity and start buying up equities. And then I think into the latter part of the year, like moving into 2024, the Fed's going to start to pull back the rate hikes on inflation, core inflation starting to drop off. That'll be around the same time that the housing market bottoms. End of summer next year. We'll see how it goes. But that's how I would affect a soft landing, if you will, for GME's price. Exercising of the puts, it'll cause the MMs to drop hedges on Monday and Tuesday. So basically this next bear rally happens and then pain for a couple months. I think we rally into the next Fed rate hike, which will be aggressive also, right? Like we get a little rally, not as big as the last one, but a little rally into the rate hike. Some dwindling earnings from like FANG and big mega caps. And then the Fed hikes rates again. We start to move down. Q4 comes around. We get even shittier earnings. Fed hikes rates again. And we start to get equity sell-offs because projections are down and banks want to sell at the top. And then, that'll start to drive down demand and inflation. We get mass layoffs. Housing market comes down. Inflation starts to slow. Then the Fed pulls back the on RRP, forcing banks into the market to buy equities. And that'll probably be around, this is really rough at this point, but around Q2 of next year. By Q3, I think the Fed will start to roll back rate hikes. And that'll start to bring equity prices back up. And they'll roll them back slow enough so as not to stimulate more growth in inflation or a turnaround in inflation, which would be really bad. So they'll really make sure inflation is reversing before they start to pull back those rate hikes. Does Cat normally construct bottoms for this long? I'm watching it on the 1 hour interval. It's had a few that last like a week or so, I think. I know back in, was it like September last year? It traded in a really low range for like almost a month, like into October, I think, before it started to like really move up. The rest of them, like 6-7 days. So I don't think this is unusually long.